couple of other names. Yesterday, we had two stocks that were doing very, very well. HAL, owing to the deliveries coming in from GE, and the other one was Siemens because the demerger is moving along at the current pace. We have with us Mr. Amit Anwani, the research analyst at PL Capital Group, who joins us on the show. Hi, Amit. Good morning. Good to see you in, and thanks a lot for joining in. Well, the first engine has come in for GE. That's good news for HAL because that will help them in terms of execution from here on. But with the stock running up 25-28% in the last 1 month or so, has it run its course or good for more?
Sure. Morning, Nigel. So I think the first engine delivery definitely is a positive sign, though the HL is missed on numbers. We're expecting at least 4 to 5 deliveries in FY25, and management has been guiding upward of 15, 16 deliveries in FY26. But having said that, I think the restoration of supply will definitely give us lumpy FY26. I was factoring almost 8 to 10 deliveries for FY26, and if all the 12 engines comes, it is slightly better on that count. Having said that, currently with the current rally, the stock has went up from 27x 2 year forward for my multiple to almost 33, 34x. And relatively speaking, I think, as I have been highlighting in our previous discussion, this is a long-term growth CAGR, which we have been talking of 12-13%. If supply chain is going to be normal in subsequent years. So I think in the past, the stock has traded 45x. The street was giving 45x. There could be more headrooms when the deliveries comes back, which we're expecting. And on a longer term basis, definitely the story continues with HL. Yeah.
Amit, sorry, could you just repeat that valuation? Where it is now, what was the peak valuation, and what is the realistic multiple that you think HL can once again go back to?
Right. So peak, I think the stock went up more than 5,000 rupees, and it was almost 50x target multiple. Even the street was getting a few names. On an average, I think about 45-50x. It came down 40-50% from the top to 27x, and I think the current rally, on my numbers at least, this is trading at about 33-34x.
And that's the question. Can the multiple again re-rate back to 45 times? Or do you not see those levels coming again? I mean, what would the recommendation be?
See, 40x is possible, and we did compare this stock with the other emerging market players and developed players, including Lockheed Martin, Raytheon, the similar kind of the revenues and similar kind of return on equities. All these stocks are trading at about 23-25x forward, and being the premium markets and the kind of decadal growth which we are expecting with HL, this might continue to be at premium versus these global players where this growth is still lesser.
Sure. Okay, so
40x.
So 40. Okay, so that's HAL. Just a slight shift on the other piece of news as well, and then we get your broader views on Siemens as well. I mean, yesterday the demerger has finally been approved by the NCLT. The market's getting very excited again. And it's going to be one more share. If I'm a Siemens shareholder, I get one more share of the energy business. What sort of value unlocking are you pricing in?
Right. So I think the energy business is contributing almost 30% of the top line. The EBIT margin is between 14-15%. So my working, if I split the two businesses, Siemens Energy and Exof Energy business, Siemens Energy will be more comparable to Hitachi Energy, which is trading at 1.5 year forward, I would say 80x consensus. Siemens Energy, on my number, when I split it out, I think it's trading at almost 55x. So there's a gap between these two companies. And there could be a valuation catch-up which can happen with respect to Siemens Energy. And also, the macros are very strong for Siemens Energy, which caters to the GIS substations, power transformers, and a lot more related to GT&D, including the HVDC part. So that way, I think between the two pieces, the Siemens Energy, which is more comparable to Hitachi in that sense, not completely, there could be valuation catch-up. Siemens Exof Energy, which is more comparable to ABB India, I think the valuations are almost 60x or similar to ABB India. So I think in that by even the growth, relative growth versus Siemens Energy piece is slightly slow. So I think there could be catch up with Siemens Energy piece. Then energy, yeah.
But Amit, you're talking about Siemens Energy is trading at 55 times. That is not cheap in itself. I mean, has Hitachi at 80, 85 times? I mean, I just wanted your view out there.
So that's why I said relative. But if you see overall space, I was checking the 10-year forward, the 10-year averages of forward multiples. ABB used to trade at 45, 50x 2-year forward, even in the history. Even this is pre-merger, which happened in 2019. So definitely valuations are expensive in some pockets, but I don't think this will be trading, all these stocks will be trading below 45, below 50 in any case.
I mean, I think they've been 45, 50 times, I think, what, decade and a half now, right? I mean, yeah, so always expensive, especially these industrial names, MNC names. Amit, so just to go back to defense, a couple of questions. It's interesting what you said, because increasingly, by the way, have you looked at institutional foreign ownership in these defense names? Is there a decent amount of ownership? Because defense is coming up as a big theme globally. You know, own defense names as a geopolitical hedge. You know, are these well owned amongst foreign institutional investors, or you think it's only just about starting now? What's your sense?
I think that's something which is quite interesting. If you see HAL and all, the government has been doing OFSs, and the government ownership came down after the IPO. But the space like shipbuilding, still the government ownership is quite high. Institutional ownerships are low in the stocks like MDL and a few other stocks. Definitely relative to the other PSU packs, the institutional ownership is a challenge, and we can't rule out going forward as BEL, where the government ownership is only 51%. There could be many long-term stocks where the story is there. The government might reduce their stake, but institutional ownership and at least more than half of the stock is quite low. Yeah.
There is no implication for the space from defense, right? It's a high value sector. And one of the ways where we can kind of placate the Trump administration is by buying more stuff from the US, especially on defense, because it's all high value stuff. But does it at all in any way impact the sort of Make in India story in that sense?
So I think there has been news that the European defense spending could benefit, but I have a slightly different view. I don't think in near term this is going to benefit the Indian companies. If you see exports, so two things are happening. Obviously, we are trying to strongly set up the foundation for the localization of defense and setting up the vendor base, and there's a lot of modernization plan. And on export, we wanted to go to 35,000 in next 2 years, and then 50,000 in next 5 years. I think major export which is happening is subsystems and few of the electronic warfare systems, the mounted guns, and the artillery. There's a few areas where the export is happening, and we are capable of to some extent. And this is also happening to the 3 to 4 countries, including US, Armenia. And I think Europe is very small pie. So for me, I think the benefit, near-term benefit would be limited. I don't see too much.
My question was more about whether this buy, I mean, if they say, well, buy more from us, will that hurt localization efforts? That was my question.
See, if they're focusing on OEM, the OEM players in, let's say, Europe and US, there could be some buying which can happen in intermediate products, which includes defense electronics. But I think it will take time. It is not next 1 or 2 years.
And of course, I mean, at least in terms of what makes headlines, it is the big stuff, right?
C-35s.
airplanes and the...
But the last has not been said on that, right? I think it's still up for negotiation because there was a lot of pushback by a lot of Indian players saying that this is not something that that we should just be buying blindly.
That morning we had the management of Zen Technologies with us, and they said
Mr. Atluri.
that, was it F-35s?
C-35, I think. Was it the F-35s? Okay.
And they said, well, but, yeah, absolutely. It's still, I think, up in the air. Thank you very much, Amit. We'll continue this conversation as we go along. Appreciate your time. We come back with some technical trading ideas. We'll have Mitesh joining us and Sudarshan joining us with those trades.